This is India Tonight, right here on India's #1 business channel, ET Now. I'm Supriya Srinath.
Hi there, I'm Sandeep Gurumurthy, and straight to the top story that we're tracking on India Tonight this Tuesday evening. It's a body blow to Subrata in a first-of-its-kind order. The Supreme Court today directed SEBI to auction a clutch of Saharas properties to repay thousands of investors. The market regulator now has the mandate to sell Sahara's 87 Indian assets worth around 40,000 crore rupees. While giving the nod, the top court asked SEBI not to sell any property below 90% of its market value and directed it to form a panel to facilitate the entire liquidation process.
In a small breather of sorts, though, for Subrata, the apex court has barred SEBI from disposing of Sahara's upscale township, Ambi Valley, near the city of Mumbai. The market regulator is now all set to kick off the auction process in the coming weeks, although it will not be an easy task given the complexities involved in dealing with real estate, the historic Supreme Court order, and what it means to Sahara's thousands of investors, and more importantly, Subrata himself, who's been languishing in Tihar jail for over 2 years, is a top story right here on India Tonight.
It's a big setback for jailed Sahara chief Subrata. The apex court today asked the market regulator SEBI to sell Sahara properties. A sale that will generate 10,000 crore rupees for securing bail in the illegal deposits case. SEBI has been directed to take help from an expert agency to auction 86 properties of Sahara Group, title deeds of which are available with the market regulator. The properties include land and developed sites located across India. However, the prized Ambi Valley project is not part of the list of properties available with SEBI for sale. SEBI has been reluctant to carry out sale of Sahara properties, citing lack of expertise in holding auctions and mechanism to evaluate properties. But after the bench led by Chief Justice of India, Justice Thakur, observed that SEBI shouldn't expect Sahara to sell its properties and should undertake the exercise as an exceptional case. Earlier, Sahara had told the court it was facing difficulties in finalizing buyers due to poor real estate market conditions and ongoing cases against its chief. Its recent talks with Government of Qatar to sell off Grosvenor House Hotel in London fell apart. Sahara has so far garnered 5,000 crore rupees, half of what it requires to secure bail for its chief Subrata as per the payment plan. Though SEBI has been forced to undertake the sell-off exercise by the top court, it will be hoping that the title deeds of the properties are clean so that it can realize the 36,000 crore rupees dues to the investors. But this will nonetheless be a tall order indeed. Arun Nayal, ET Now, New Delhi.
Now, to break down what the Supreme Court order means for Subrata and just how easy or difficult will this sale be for market regulator SEBI that really has no expertise on that matter, we've joined by Ashwin Mohan and Vijay Iyer to take that story forward. Thanks very much, gentlemen, for being with us. Vijay, to you then. You've been tracking SEBI for a very long time. This is good news indeed for Sahara's thousands of investors. But is SEBI equipped to handle a property sale of this magnitude, something that's going to throw up money worth 40,000 crore rupees?
That's the most important question, as you are rightly putting it, Supriya, because this is a nightmare that has come true for SEBI. Unfortunately, SEBI always was of the opinion this is not its cup of tea. SEBI, as a regulator, had passed the appropriate order and it was just wanting to take the investments and give it back to the legitimate investors. But now with Supreme Court passing this final order saying SEBI will have to indeed do the sale proceeds, clearly SEBI, a legal team, will take stock of this situation, chalk out a roadmap. The two important aspects that SEBI will have to look, or rather the challenges would be, one is on the valuation aspect, which always is a tricky issue when it comes to real estate assets, and secondly the most important aspect will be the title deeds. SEBI, looking into this case for the last 5 years, always is of the opinion that title is one issue which Sahara properties have been grappling with in any property that they have been looking. So that is one aspect, and also legally in such cases 3 preceding title deeds will have to be taken into consideration, which in Sahara's case in all probability is not available. So clearly it's a huge task for market regulator SEBI. but nevertheless they will have to now find the auctioneers and the right valuators so that things could be put in a place to take this auction forward. And quickly, Sandeep and Supriya, if I could add, we need to understand that in the last 2 to 3 years there have only been takers to the tune of hardly 500 crores of the 10,000 crores already available with SEBI when it comes to claims from the investors. So clearly at the end of the day, this money, as and when it's recovered, will go into the consolidated fund of India, which clearly in a blessing in disguise for Government of India with a huge bounty today or tomorrow going into the consolidated fund.
When's that money going to come through is a huge question mark though, Vijay. But Ashwin, tell us, what are the legal implications of this unprecedented verdict in many ways?
Unprecedented, definitely it is, Sandeep, and I've been speaking to a whole bunch of corporate lawyers and they are firmly of the opinion that indeed it was a positive step taken by the Supreme Court to step in and in fact go ahead and force the regulator to sell assets. Now that doesn't happen every day, where you have the top court of the land in fact directing a regulator to sell assets and recover dues. Also, one aspect that needs to be kept in mind is that legal experts are telling me that when it comes to such a humongous exercise, one needs to keep in mind, as Vijay was also referring to, the valuation component. And the valuation differs for movable assets and immovable assets. And clearly, if the stakeholders' dues have to be returned, then this auction process has to be carried out in a speedy manner, because in certain cases, the valuations of the assets may just deplete at a very fast rate. One also needs to keep in mind that a similar case had in fact erupted in the past between SEBI and an investor, and in that case also the Supreme Court had in fact proposed this plan that why does the regulator not step in and go ahead and in fact sell the assets and recover the dues. But back then, as Vijay was also pointing out some time back, SEBI had in fact expressed its anxieties regarding whether or not it has the physical infrastructure to carry out such a huge and complicated exercise. But this time around, clearly, I mean, there's no choice left for the market regulator. It has to go ahead. It has to in fact form that independent panel and in fact recover the dues. But one other aspect is Subrata Roy has been languishing in jail for the past 2 years, and who knows, as part of these sale proceeds, that remaining balance 5,000 crores, if that can also be given back to the court, then who knows, Sahara's chief may well be out of court. But of course, all depends on that entire sale process, which is of course lying in the court of the market regulator SEBI.
Vijay Iyer and Ashwin Mohan, appreciate you both joining us live right here on India Tonight with a 360-degree analysis of what is perhaps an unprecedented move. And because it's unprecedented, time to get your expert view from Sandeep Parekh, founder of FinSec Law Advisors, on the implications of this verdict. Sandeep, we appreciate you joining us very much right here on ET Now. Is today's move by the Supreme Court unprecedented according to you, in the sense that you don't often see the judiciary direct forced sale of assets, and that too by a market regulator?
Yes, I mean, this is certainly not common. The judiciary does indeed attach properties, but it's at the bottom of the food chain in terms of judiciary attaching assets in case of liquidation or bankruptcy, etc. So this is very unusual that at the Supreme Court level they're kind of directly supervising the attachment and sale of properties. But it's certainly not unprecedented. There have been not similar, but other cases in which the Supreme Court has supervised attachment of properties. So I think it's fairly rare, but it's not unprecedented.
Right, Sandeep, when assets have to be sold to recover dues, time is essential because the value of certain assets gets depleted really fast. Keeping that in mind, isn't today's move by the Supreme Court a step in the right direction, because the sale process has in many ways now been fast-tracked, isn't it?
I think so. And I think really what happens is in these attachment and auction of property by the lowest part of the judiciary, in case of, let's say, bankruptcy, it takes typically years, if not decades, for actual sale to occur. So given that this is coming directly from the Supreme Court, one can expect that at least the process will move very fast, and there won't be any hitches to the whole process. Of course, we don't know the value of each property and the kind of auction reserve prices which are going to be set, and whether they're going to be way below the market or just around the market price.
Right. Sandeep, what are the potential hurdles, according to you, that SEBI can face during the entire sale process? Because like we were pointing out, it's not often that we've seen the regulator, sell these assets. Do you think the regulator is equipped with the necessary infrastructure to carry out such a Herculean task?
Certainly not. I don't think they've ever auctioned properties in the past. My guess is they'll hire a real estate agency, real estate agent to actually carry out this whole task from beginning to end on a turnkey basis. So I'd be very surprised if they undertake even a small part of this entire action, and therefore handing it over to a large real estate agent or a broker is going to be the likely next step.
Sandeep, because you've been an insider, it's only fair that I ask you this question. This case has obviously had its shares and a fair share of its ups and downs over the past 4 years. Today, the court seems to have really run out of patience and intervened. Do you believe, and in hindsight, because we have the advantage of that, SEBI could have handled things differently to avoid a scenario that emerged today?
I don't think so, because I think there's the scale is epic in its proportions. I think Sahara is supposed to have more investors than the entire investor population of India. So just the task of finding all those investors, many of them were just Kalavati National Highway 8 kind of names and addresses, and trying to sell real assets, which SEBI has never done in the past. Information which comes by the truckload. These are all things which no securities regulator anywhere in the world is equipped to handle. So I think that SEBI has done a fairly good job with whatever little manpower it has to handle this gargantuan task.
All right, we leave it at that, Sandeep. Running out of time. Thanks for joining us. Appreciate you joining us on India Tonight.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.